So hello guys, welcome back to another session of pre-market analysis, and in this session we are again going to predict what is going to happen in this EURUSD and GBPUSD pairs. Okay, so every day I come for pre-market analysis and post-market analysis. Okay, now we'll be predicting the price movement for pre-market analysis, that is the London session and the New York session. Okay, and then after the London kill zone ends, this particular yellow zone, you guys can see that this yellow zone is London session and this green zone is actually New York zone. Got it? Now we anticipated yesterday that the price will go on take these highs, and that's what the price did, and it's really good. So this arrow, you guys can see this arrow, I put it in the last session to indicate the price movement, and yes, that exactly happened. Got it? No need for this thing, but yeah, we can see there's a fair value gap that has been inverted, and this can be used for future reference. Okay, let me delete this thing. Buy sell liquidity is taken. Anything else? No. Let me just delete all the unnecessary drawings. Got it? So and this order block is now reversed, so the order block is not respected, so let's delete it. Okay, so select it. Okay, let's go on a daily time frame and see what is actually happening. We are hiding the drawings. Okay, now what we can see is that we can see there's a fair value gap, right? And now the daily candles have closed above this point. Okay, now this fair value gap has become what? It has become a inverse fair value gap. Got it? Now this fair value gap has been inverted. It means that it will try to act as some kind of cushion or support for the price to go higher. Okay, so yes, this particular fair value gap, and I will actually highlight this fair value gap like this. So I have highlighted the fair value gap. This particular thing is acting as a change in the structure of delivery. Okay, now we can see there is a sell side liquidity which for which the price is coming to take this sell side liquidity. Okay, and let me delete this point right now. So we can see there are like equal highs. If you go on shorter time frame, let's see on 4-hour time frame. So we can see on the 4-hour time frame, these are the highs. Okay, so these are the equal highs which can be taken out, right? So these are like equal highs and they can be taken out. And yes, the last time when the market went higher, it didn't take out this particular buy side liquidity. Okay, then what does it mean? It means that the price is actually going to take it out on a later time, and it is trying to generate more liquidity for this position to be taken out. Got it? Before it takes out that position, so before this high gets taken, it is actually generating a liquidity. So that is the reason market moves. So four reasons are there why the market moves: generating liquidity, and killing the, or maybe sweeping the liquidity, and creating imbalance and going to equilibriums, right? Now we can see there is a great price swing in upward direction on daily time frame. We can see that, right? Now because we have done a great swing, we can expect the price to come back down to the equilibrium point. And if you can see that equilibrium point just lies below this sell side liquidity which we are targeting. Okay, now let's go on a shorter time frame, like 4 hour. Okay, 1 hour is fine. Now this is a change in structural delivery. The price broke it, took a support from this thing, and then again broke it, then took a support from this, then again broke high, but now it broke the change in structural delivery. And what we can see, let's see if there is any SMT between this high and this high. Okay, let's see if there is any SMT between this high and this high, and let me just keep the USD in middle. Okay, so first of all, let's try to find a SMT between USD and GBPUSD. So let's see, this is the price for EURUSD. See these two highs, this is actually going higher high. Okay, if we go down, still it is going higher high, then it is fine. Okay, there is no SMT in that, and that is fine. So no SMT is happening in this case. That means the price is not reversing, it is just trying to take out these lows, right? So these are the price indications which I took in, which I actually analyzed for yesterday. I analyzed the GPUSD, and that is the price movement for them. Got it? Now let's first analyze this thing. So we actually created a large fair value gap while we are going down. Okay, and this is a fair value gap, daily time frame fair value gap. The price is taking support from this daily time frame fair value gap, which I want, which is like okay. And let me just reduce the intensity of this thing. Okay, the intensity of this thing is reduced, and we can see when the price rallied higher. Okay, it touched this fair value gap. You guys can see this fair value gap, it touched it. Okay, and all of these lows were taken out, okay, with a sweep. And how much value is that thing? It is around 17.6. It means nearly around 20 pips it was swept. Okay, but this sell side liquidity has not been taken. Okay, this sell side liquidity has not been taken, and also there's a fair value gap while the price was going up. Yes, here we are. You guys can see this. There's a fair value gap. So we are in a fair value gap trying to reverse this thing, but there's a breakdown, and also there's a fair value gap which is created. Let's see what is about to happen. Let's try to analyze it. So we have sell side liquidities. The buy side liquidity is now, this particular buy side liquidity is taken, and it is actually fixed over here at this point. Got it? Now that is the highest buy sell liquidity. Well, the shortest one is actually we can take on. See, this is 1 hour time frame. This can be one of the drawn liquidities. Okay, drawn buy sell liquidity. Let's draw recent buy side and sell side liquidities to find out what can be done and what can be not. Okay, so we have this here, and we are taking out the buy sell liquidities, short term buy sell liquidities. Okay, and this low which we have created is actually itself a short term sell side liquidity. Got it? Short term sell side liquidity. So here we are, sell side liquidity. Now I want these liquidity to be taken out. Okay, well, these lows are not that much, I feel like the liquidity is just below this point is not that much. Okay, so might be the price could just take out this sell side liquidity, and there's a fair value gap, and it can reverse from that time, that point to take out the buy sell liquidities, or it can just directly go this PS this point and PS this point, then try to go higher. Got it? So mm and we have inverse fair value gap right over here at this point as well. So if the price reaches back, so we have a fair value gap created, and the fair value gap has been inverted, and now this is an inverted fair value gap. Now because we have inverted fair, I think I should use a different color for inverted fair value gap. Maybe like this is okay. Yeah, so now this is an inverted fair value gap. Ah, that one was okay. Okay, so here we are in inverted fair value gap, and also there is a fair value gap right over here. Now if the price directly rallies higher, okay, this is a change in structure of delivery, it could go back up, and it went back up, and it broke down. Okay, but it didn't take out these sell side liquidities. I want this sell side liquidity to be taken out, or maybe not taken out, but just some kind of body should be touched, or maybe generated, the liquidity should be generated. Got it? That is what I want. So now let's see what is about to happen. Okay, I can't find really good scenarios today. Okay, and the scenarios are not really clear about what the price wants to do, but let's see. Okay, there's a fall, right? And this fall was on what? This fall was in, I guess, before the start of the Asian session. There was a fall, right? And the price rallied higher, then again there is a fall. Okay, fine. Now what we could do? A daily bias is like, we are actually bullish or maybe bearish. Think about this. Sell side liquidities are resting, so this sell side is taken by this low. The sell side was not taken. This sell side was taken by this thing. So yes, the price should come back to this point. That is definite. The price should come back to this point, and it can do something like this. It can take out this high, maybe just take a support, or maybe it can pierce it. So it's really lesser chance that it can pierce and go beyond this thing. Okay, and take out these buy side liquidities. This could be one of the option, but I have less conviction over this thing. Let me just have a look quickly. Okay, is this really trying to be like this? Think about this. Okay, for a second, let's keep the analysis of EURUSD like this. Let's go on GBPUSD and try to analyze it, and let's try to find some conclusion from that thing. Okay, so let's go on GBPUSD to find some conclusion from this thing. Okay, I'll say, see, a lot of people, a lot of retailers are really they really love to find the toppest high. Okay, highest high, and they like seeing this structure, so they think now the market structure has broken. Okay, so see, anybody who's watching this thing will look like, he'll see that okay, these are the trend lines, this trend line is broken, and now the price will come back up. Okay, sorry, the price will start breaking down. Okay, that is what retailers think, and I think what is going to happen should be opposite of what retailers think. Okay, so it has broken down, fine. People are thinking that it will just keep breaking down, but it will just take out the sell side liquidities. Okay, and then it will just go fly off to the buy side liquidities. That's what I want. Got it? Let me extend this to thing. Okay, and now we have this session over here. We can take a support at this point, at the end of the session. Okay, so maybe at the end of this thing we can do something like this. We can have a look, broke down. Okay, and maybe this. Okay, this is actually somewhat, this is what I want. Okay, this is what I want and this is what should happen. And okay, fine, this is what actually I want for the price to happen, to take out the sell side liquidities and maybe take a support, generate or whatever do, I'll just do it. And there must be some SMT that should be happening. Okay, so there should be an SMT that should happen. So SMT is here. Okay, so SMT should happen, sell side liquidities got taken, and I'll run for buy side liquidities. Lesser chance are that the price will reach back to the, you know, what you call it, this buy side liquidity, because it has already been taken up. But I'll look at the momentum of the part of the price. If the price is showing me a really good momentum, then yes, I'll look for the higher buy side liquidities, because with this buy side liquidity there are other buy side liquidity which are resting over this point. Okay, so now the market has just tried to generate some liquidity over this thing. Okay, and it will take out sell side liquidities before the market wants to go higher. Okay, it all depends on this thing, right? It has taken a support, it has come down, right? And then now let's see what is about to happen. This is what I anticipate. Let's go on GBPUSD to analyze it. Okay, this particular arrow, you can see this was what I showed as a movement, that it will take out this particular zone, should be taken out, right? Sorry. Now these are the sell side liquidities which are being built. Okay, sell side liquidities, now this sell side liquidity taken out, but this sell side liquidity is not taken out, and the price is way too much away from that point. And also we have a recent sell side liquidity which has been built. Oh sorry, let me just go on daily time frame. If you guys are new to this session, you will not understand what I'm trying to say. I think there's a fair value gap that has been created between the price of this thing, and we can see there's a fair value gap which is inverted, and there's a fair value gap which has been created while falling. Okay, so the price is in two types of fair value gaps. Let me just unhide all my triangles. Okay, so this particular red thing is an inverted fair value gap, and this particular thing is a fair value gap. Got it? Now we can see one thing. Now because this particular fair value gap is between this high and this low. Okay, so let me just increase this thing so you guys can see. I'll just draw this thing, you focus it on. Okay, now this is the fair value gap between this price and this price. Okay, let me hide the drawings. Okay, here we are. I hope you got it. Now we are in a inverted fair value gap because this fair value gap has been inverted, right? And now we are in, if you see this particular candle and this particular candle, it means we are in this fair value gap, right? This short term fair value gap. Okay, which is this normal fair value gap is in the inverse fair value gap of this particular thing. Okay, this particular thing. So the higher time frame inverted failure gap and a shorter in failure gap inside this. I think I do not know about this concept, but I have heard it. Maybe this is called CB or BC, sell side imbalance and buy side liquidity, whatever it is called, something like this. Okay, CB or BC it is called. Let me just have a look. CB or BC, ECB. So now here we are. Yes, let it be. And by the way, let's have a look on any news today. Okay, so let's have a look. So we have CNY news. It's like very mild, no need to watch it. Okay, so we have this red news over here, USD. It is at 8:30 p.m. 8:30 p.m. It's like instant time, so it is after the kill zone. After the kill zone, so after our entry is made, that is the value. Okay, so yes, we have to care about CSD. CHF we don't need, GBY, JPY, no. All of these are just okay. We have to care about 8:30 p.m. There is a news, right? So you have to care that at 8:30 p.m. we have got a news. Let me unhide all my drawings. Okay, now this is inverted fair value gap which will try to keep the price below it, understandable. And this is the fair value gap, right, which has now been inverted as well. But inside this fair value gap there is a fair value gap right over here, you guys can see. Now because the price is inside this fair value gap, it's a normal fair value gap. Okay, it's not inverted or something, right? It's normal fair value gap. Got it? And now this inverted fair value gap was successful in keeping the candles below it. Okay, so it means it is keeping the candles below this point. Now what I want, I want the price to come back to this point to take a support. Why do I want that? Because the price has did a rally. Okay, now if I hide the drawings for a couple of minutes, you can see the price has did a rally and it has rallied higher. I want the price to actually come back to this equilibrium level. Okay, now if I want the price to come back to that equilibrium level, which is just near, so I want this particular sell side liquidity to be taken. Got it? So there's a confluence that I want this sell side liquidity to be taken because there's a rally higher and the price needs to reach back to the equilibrium point. Okay, and this equilibrium point is lying below this sell side liquidity or near to this sell side liquidity. Okay, so let's go on 1 hour time frame. Okay, so we have this sell side liquidity which needs to be taken out. Okay, so yes, the confluence is that I want this sell side liquidity to be taken. I think this is not what I want. This is not equilibrium point, but yeah, we have sell side liquidity. Got it? Plus we have equilibrium at this point, nearly. Okay, so SSL plus EQ. So we have equilibrium plus sell side liquidity at this point when the price has started to move higher from this point to this point high. We can see this equilibrium, the 50% equilibrium level is just lying near the sell side liquidity of this point. So I want the price to come back to that point. Got it? Now what can happen? See, the price. Okay. In this case, we have more sell side liquidities in here. So let me just have a look. Just a second, guys. Okay, I think somebody just saying too much things. Just give me a second. Just give me a second. Okay, sorry. Back to the analysis. Now, this analysis is going to be a little longer. Okay, if you don't want it, you can just close the video. Okay. Now, let's see. There is a chance for the price to go back, take out this sell liquidity, and also at equilibrium. But there's a fair value gap that has been created, and also there is inverted fair value gap that has been created. But I want that the price of the confluence of the price to do this. Okay, back to this is much more higher. But for EURUSD, let me have some time. It's already been 17 minutes. I need to finish this thing only. I wanted the price to do this. So what can be done? There's a fair value gap that has been created, a long-term fair value gap. The price could come back to that point. Okay, and then it can break down. That is what can happen. I think doing this is better. If we are doing this for GBPUSD, suppose. Okay, so you want this particular inverted fair value gap is there, right? Inverted fair value gap, again fair value gap. So there's a fair value gap created. It got broken down into inverted fair value gap. I want the price to go higher and then break down to the sell side liquidity, which is resting just below this point because the buy side liquidity is taken and another buy side liquidity is way too much higher. But in case of EURUSD, that buy side liquidity is not taken. Okay, so you guys can see this nearest buy side liquidity is not taken and it has not been even taken. The bodies are not even taken this thing. Okay, just damage is there of around 11 or 10 pips. Got it? So yes, that could happen in price. So now, if initially, remember this thing, if initially the price goes up, right, and I want the price is going up, then I want it to break down into this thing. Got it? But if the price initially breaks down, okay, if the price initially breaks down, got it, then I want it to look and go higher. That is what I want. Okay, either there are two kinds of entries. Either if the price goes down, okay, first takes out sell side liquidity, and then it goes higher. Okay, otherwise it can take out this particular change in structure of delivery and then it can go down. Got it? So yes, but I feel like no, this particular thing confluence is much more relatable. So yes, we have this, and we have a broke down. Okay, we can delete this and we can consider this thing. Okay, there's a change in structure of delivery itself. This particular line itself is a change in structure of delivery. Okay, let me put it back to that point. Okay, so here we are, or you can call it the market structure shift, or the price could come back to that point. The wicks can do a damage, but you know, the bodies, I don't want the bodies to go above this point. Okay, just for a more good price movement. Okay, and then we can see an SMT there for the confluence of the price to do this, and then there can be a severe breakdown. Okay, so SMT, yes. So I want this to happen. So there's a fair value gap, you guys can see. I have highlighted. Did I highlight this fair value gap? No, I didn't highlight this fair value gap. Let me highlight this fair value gap, which has been created while the price fell down. So the price back to some higher time fair value gap, it will break down below this particular lows to take out take out all of them. Got it? So this is the confluence for EURUSD. Got it? Have a look clearly. This is my confluence for the EURUSD, and this is my confluence for GBPUSD, that it needs to go out. There's a fair value gap. It can, you know, just have some low, maybe have some damage. Why? Because there's a change in structure of delivery right now over here. So there is a change in structure of delivery done. CISD. Okay, now there's a change in structure of delivery. Fair value gap created, fair value got inverted, so I want the price to go back to this change in structure of delivery at least. Okay, the bodies can do the damage. Okay, the wicks can do the damage, but the body should not be there. Okay, and there must be some SMT that should be created, and the price then it should go down. That is what I actually try to confluence. Got it? So SMT is there. Got it? So we have the SMT over here. Okay, so this is what I want for GBPUSD to happen. I hope it's okay, right? Let's have a quick look on DXY as well. There is hmm, there's a fair value gap that has been created. Okay, liquidity void that has been created, a really high liquidity void. Price should come down into that, but let's see. Okay, so the damage is done. Fine, fine, fine. Is there any order block or something I could find? So there is an order block. The price should remain below this point. Okay, so I want the price to just remain below this point. Okay, so we can see there's an order block. So I want the price to have a support from this point. So order block is that. It's red color. Okay, so order block, the sell side liquidity as well is also there, and yes, that is what I want the price to do. Got it? Now let's go EURUSD. EURUSD, is there any other order block I could see? Not properly I could see any order block. Okay, so let it be. I can't see any proper order block, so I think the better movement I'll see is on GBPUSD this time. I have better confidence on GBPUSD. I'll take, if the movement happens, I'll take it on GBPUSD rather than taking into EURUSD. Okay, although the movements are similar, but yes, this provides me more confidence and a better confidence. Got it? Okay, and yes, there's a fair value gap which is right now over here with us inside that block. Got it? I know there are a lot of text, but just keep a look, avoid these things. Okay, if you understand properly, then you will understand my drawings. Got it? So visual order, it should be different. So that is my confluence. Okay, this is the price movement that can happen today. I think okay, if you have stayed with me for 23 minutes, it's fine. Okay, I'll really thank you if you have stayed for 23 minutes. Can you comment down below to see everything? Okay, and these particular price charts will be available in the description box of this video. Okay, you guys can access these charts from my video from the description box link. Okay, and that is it, guys. Take care. See ya. Bye bye. Have a nice day. Keep backtesting. Keep learning. Keep trading. Bye, guys.